Good morning, everyone. Good morning, everyone. Are you there?
Yes, sir.
Yeah. So yesterday in the taxation class, we have seen exemptions. I explained to you with the concept of the provisions to claim exemptions under Section 54, under 54B. Same is the case with 54D, 54G, 54GA. Please understand, these all sections that we see are related to a specific asset. If you observe here, 54, just 54 talks about only a residential house. Next talks about only an urban agriculture land. Next, it talks about an industrial area, okay, or land or building. Here it talks about an industrial land building shifting to a rural area, and here it talks about an industrial land building or plant in a SEZ, that is special economic zone. So if you observe all this, these assets are specific assets. That means their definition is very focused on those particular assets only. But you can have capital gain not only from these assets, you can have capital gain from many sources. For example, you might have capital gain from selling a shop. Shop is neither a residential house, nor it is an agriculture land, nor it is an industrial area. It's a commercial property, right? If you have an open plot which is situated, that is also not coming under any of these. So if you have any other asset which is not classified here, then you have to make use of provisions of Section 54 EC, where they clearly say any applicant is applicable, any person is eligible to claim the benefit. One. Second, it is applicable for any asset. Okay. The only condition is that asset has to be a long-term asset, right? And next, in case if you do not want to invest your money, or if you don't know where to invest your money, you can invest all that money on in the bonds issued by National Highway Authority of India, or REC, that is Rural Electrification Corporation. If you invest this money in these particular bonds issued by Government of India, not only you will be able to save tax, but you will also get interest on whatever savings that you do or whatever investment that you do. That is one of the advantage of Section 54 EC. So if you observe, in most of the exams, they ask you provisions relating to Section 54 EC. The reason being, it's a versatile section. That means anyone is eligible, all assets are eligible. Okay, and not only that, on your investment in these particular bonds, you are also eligible to get a tax benefit. That is one of the very important aspects, which is not applicable for any of these. It is only applicable for Section 54 EC, right? And this investment has to be done within 1 month. That is very important. Are you able to understand this? Most important thing, capital gain deposit scheme. This section of capital gain deposit scheme, this is not applicable for Section 54 EC. You have to remember that. Clear? So since the provisions of capital gain deposit scheme are not applicable, unutilized money also in capital deposit scheme will also not be eligible. So please try to understand, provision is not applicable for Section 54 EC. For rest all of the sections, this provision of capital gain deposit scheme is applicable. Clear? So this is what you have to understand as far as exemptions related to capital gain deposit scheme. It's a very important section. Please try to remember this particular section, because anything could be asked for 10 marks, or specifically they may ask only for 5 or 6 marks provisions relating to Section 54 EC. I very well remember in one of the case studies they had asked this question for 20 marks, and many students did not write or did not study this exemption limits under capital gain under Section 54. So remember, it is a very important section, because this is the only section to claim exemptions from long-term capital gain. There are no other sections no, to claim exemptions under long-term capital gain. So Section 54 is a only section under capital gains. So please study this and take this question very, very seriously because it has been often asked in exams. Whatever it is, it might be asked as a full question or it might be asked specifically to only EC or it might be asked only to section 54. So please understand all these things have to be clearly understood to you. We come to the last part. Okay. Uh, Section 54F is applicable again for individual and an HUF. The asset that has to be transferred, it has to be a capital asset. Please listen to this. It has to be a capital asset, but it need not be residential house. This is what it says. It has to be a capital asset, but it need not be a residential house. It has to be a long-term capital asset. The only provision by which you can claim exemption is you have to invest this money again into residential asset only, and the time limit given to you is 1 year before, 2 years after, or 3 years for construction. Rest everything remains the same. Here also, there is no provision as far as amount exempted. There is no amount going to be exempted here, but capital gain deposit scheme money, capital gain deposit scheme provisions are going to be applicable. So this is important. Of course, I have not seen much questions appearing on section 54F, but remaining all part, I have seen questions appearing off and on as far as section 54 is concerned. So end of the day, I want to tell you that section 54 is important. Please don't neglect it. And you need to know thoroughly well how this particular section operates. Any doubts in understanding this? Please tell me. Otherwise, we have to move to the next part, that is indexation. Okay. If there are no doubts, we'll proceed to the concept of indexation. Again, I would say indexation is nothing but adjusting the value of your asset to the present inflation level. That is what is the meaning of that is the meaning of indexation. Now, why this indexation is important? Indexation is important because if the concept of indexation is not given, you will end up paying a huge amount of tax. And the government is also equally responsible to see to it that they do not charge heavily on the amount of capital gain that you have. Because over a period of years, inflation has definitely affected the value of your asset, and that inflation benefit also has to be claimed. And that is the reason the concept of inflation comes into picture. Clear? Okay. Now, what is important here is you need to understand. I'll just give a very simple example for you to understand so that things become very, very easy. Suppose I have sold an ancestral house. Okay, the house that I'm living in, I have sold it. I've been living in that particular house, or my family has been living in that particular house for last, let us say, 80 years. Okay, sorry. We have been living in this particular house for 80 years. Okay. Now, my grandfather or my great grandfather might have purchased this particular house. Okay, let us say the house is around 2,500 square feet. The house is around 2,500 square feet, and we have been living in this particular house for a very long time. When this house was constructed, the value of this particular house was, let us say, 10,000 rupees, probably 80 years ago. This is the value of the house, 10,000 rupees. And today, if I go and sell this particular house, I can easily get around 75 lakhs for this particular house. In today's market value, I can get easily around 75 lakhs for this particular house, right? Now, my fair value of consideration, I'll just write here, my full value of consideration is going to be 75 lakhs. Okay. Less, what is my cost of acquisition? My cost of acquisition, okay, at what is the price at which I acquired this house? I acquired this house for only 10,000 rupees. That means what would be my capital gain? What could be my capital gain? My capital gain would ideally become, right? My capital gain would ideally become 74 lakhs, would become 74 lakhs 90,000. 74.9 lakhs would be my capital gain. On this amount, if I am supposed to pay 20 lakh 20% as interest, 20% as tax, the amount would be very, very huge amount. So what the government says, assume that we know that you have purchased this particular house in 80 years ago, but let us assume, let us assume that if you had purchased this particular house, if you had purchased this particular house in the year when you want to sell, right? What would be the cost of this particular house? In that case, using the concept of indexation, I arrive at I have purchased this particular house for 65 lakhs. I have purchased this house for 65 lakhs. I am selling this house for 75 lakhs. The difference amount is only 10 lakh rupees. On 10 lakh rupees only, I have to pay capital gain tax. Now imagine paying tax 20% tax on 74 lakhs 90,000 is better, or paying tax on only 10 lakhs is better. Which one is better? Where will you end up paying lesser amount of tax? Naturally, you're going to end up paying lesser amount tax here, right? Because 20% of 10 lakhs is only 2 lakh rupees. So you just pay 2 lakh rupees as capital gain tax, finish off the matter. Here, what would be here? What would be your capital gain tax? Right here, your capital gain tax will somewhere work around 32 lakh rupees. Where is 32 lakh rupees and where is 2 lakh rupees? A huge difference. So that is what the government says, that if you're having a house which is very, very old, and if you want to dispose of that particular house, not only house, any capital asset, okay, which has uh, been in existence prior to 2001, if the asset has been in existence prior to 2001, you can use the cost of inflation index values and arrive at the new value of the house. And that new value of the house, we will consider it as cost of acquisition of that particular house. So you know what is the new cost of acquisition, you know what is the full value of consideration that you own. Difference amount only is going to be your capital gain, and that amount, if you want to invest into capital gain deposit scheme, no tax for whatever number of years you want to invest. But in these 3 years, utilize that money for purchasing another asset. If not, at the end of 3 years, we will charge 20% and the remaining amount will be given back to you. This is the concept of indexation. In fact, because of the concept of indexation, people are easily paying lesser taxes. If this concept of indexation would not have been applicable, people would have ended up paying huge amount of taxes. And if people are forced to pay huge amount of taxes, then black circulation of money keeps on increasing. Are you able to understand? To prevent this, the government has come up with the concept called as indexation. Any doubts in understanding the concept of indexation? Please tell me.
So,
Yes.
uh, so there are values of indexation, sir,
Yes.
while calculation.
Yes.
In exam, they used to give that values, or we have to remember, sir.
No, no, no. They will give you all the values. Don't worry about it. This is what you are
Okay,
talking
sir.
about,
Okay, sir.
right?
Yes, sir. Yes, sir.
All these values will be given to you in the exam. Don't worry.
Yes, sir. Yes, sir.
Yeah. Anything else?
No, sir.
Okay. Now, this benefit of indexation is applicable for certain assets. It is not applicable for certain assets. Now, we in the next slide we are going to understand for which assets the indexation benefit is not applicable. Is what we are going to just see. So, indexation not applicable in special cases, and what are those special cases? Is we'll try to understand. First of all, indexation benefit is never applicable for short-term capital gains. In other words, it is not applicable for short-term capital assets. Why? Because if you say you are holding a short-term capital asset, which means it is less than 3 years, right? If it is a physical asset, it has to be less than 3 years. Only if the asset is greater than 3 years, then we can call it as a long-term asset. So any short-term asset that you hold, if it is less than 3 years, indexation benefit will not be applicable. Next, indexation benefit is also not applicable for debentures and bonds. The reason being, your bond and debenture will never depreciate in its value, or will never have inflation values getting affected to it. Because every year, whether it is a bond or whether it is a debenture, every year a certain fixed money of a certain fixed money is given to you in the form of rate of interest. So that will take care of the inflation level. Next, shares in or debentures of an Indian company acquired by utilizing convertible foreign exchange. in this particular case also the benefit of indexation is not applicable. So basically for financial assets, all financial assets, generally the concept of indexation is not applicable. So whether it is bonds, debentures, shares, whether it is an Indian company, foreign company, convertible forex, whatever it is, benefit of indexation will not be applicable for financial assets. Okay. Next, this benefit of indexation is also not applicable for depreciable assets. Remember, we had solved problem the other day. We solved four problems. Okay, we solved four problems when written down value is zero, when written down the block is not into existence. All those problems we have seen. If you observe, that asset was a depreciable asset, right? So in case if it is a depreciable assets, the value of indexation will not be arrived. Why? Because every year you write down the new written down value, right? Every year you write down the new written down value. So when you write down the new written down value, it has already taken into consideration the inflation level, and that is the reason the concept of indexation will not be applicable for depreciable assets. Okay, there's only exception that only power generation units are eligible to claim the benefit of indexation. I repeat, only power generation plants are eligible to claim benefit of indexation. The reason being, all power plants generally follow straight line method of depreciation. So whichever company now follows a straight line method of depreciation, they are indirectly eligible to claim indexation benefit. But if any company is following a written down value method of depreciation, then indexation benefit is not applicable for it. Any doubts in understanding this? I repeat, depreciable assets are not eligible to claim indexation value. The reason being, every year you arrive at the new value of the asset in the form of a written down value. The only exception for this is power generation plants. Power generation plants are eligible to claim the benefit of indexation because they generally follow a straight line method of depreciation. So now any company who follows a straight line method of depreciation, all those companies indirectly become eligible to claim the benefit of indexation. Clear? Next, it is very important for you to understand the concept of slump sale. Can anyone explain to me what do you mean by this word? What do you mean by the word slump sale? Can anyone explain to me?
That sale is made, sir, like lump sum consideration, sir. We considered a sale of the particular things for a lump sum consideration without values being assigned to the individual assets and liabilities.
Correct. Correct. Suppose there is a company and the company is in a pretty bad state. It has a lot of
Yeah, yes.
bad debts, sales not happening, assets are old. A company, a sick unit. If I have to give an example, I'll give an example called as a sick unit. Suppose there is a sick unit, okay, and people are not coming to the companies, people have not been paid salaries, machines are lying idle, stock is lying idle, but it is worn out, okay, huge amount of debts, then you don't have, you have also have bad debts. All problems are associated with that particular company. And one fine day you decide that anyway, I cannot get a lump sum, I cannot get a good value for this particular company. Okay, I will just sell this company, let us say including land, machinery, whatever is there, I'm just going to sell it for 2 lakh rupees. So anyone who wants to take this plant want just pay 2 lakhs and take away this whatever is there. So here when I ascertain the value as 2 lakhs, I'm not saying my land is 60,000, my machinery is 3,000, my stock is 10,000, my bad debts. I'm not assigning any one value to any one entity in my balance sheet nor profit and loss account. I'm generally uh, arriving at a value, okay, and that has no meaning actually. I'm not giving any meaning to that particular value. This value, I feel that I should get 2 lakhs for this sick unit. So you give me 2 lakh rupees and I will sell off this particular plant to you. So when you're not able to assign a value to the assets and when you're not able to assign a value to the liabilities, in such case, when you're unable to determine the net worth of the company, You just arrive at one random figure and dispose of that particular asset. That value or that transaction, we call it as slump sale. Okay, slump sale means because you are not able to assign any value, you are just giving a value that comes to your mind and disposing of that particular asset. That is what we call as slump sale. So whenever a slump sale happens, okay, whenever there is a transaction of a slump sale, you cannot claim the benefit of indexation. Is that clear? Next is units purchased in foreign currency. Okay, under section 115 AB, again it comes to financial assets. So financial assets indirectly are not eligible to for getting a benefit of indexation. Likewise, the last one, GDRs are also not eligible. What do you mean by the word GDR? What do you mean by the word GDR? Can anyone tell me what is GDR?
So it's a global depository receipt.
What is it? Means what?
So the receipts that are traded in the market, like equity stocks, I guess.
No, but then why do you call them global depository receipts?
So
But
because
the companies listed is
Yes, Rashmi?
any shares or debentures can't directly be traded in foreign markets, sir. So for that GDRs are required, sir.
Only debentures?
So I said shares or debentures or any securities, sir.
Okay.
so these are issued in more than many many
That matter.
countries.
Okay.
Or FDIs for that matter, sir.
Not FDI. FDI is foreign direct investment. That doesn't come under the head as GDR. Okay. Okay,
So
I'll give you.
GDRs are to be deposited with the regulatory body which governs the
Correct.
trading activities of
Correct.
that particular country in
See,
order to.
I am, let's say, have you heard of a company called Mafatlal Suitings?
Yes, sir.
Okay, Mafatlal Suitings. Okay. Uh, Basically, they are into textile business. They are into textile business. Now, imagine you are Mafatlal Suitings Limited. You want your shares to be traded on London Stock Exchange. Are you eligible to do that? You are not, because you don't have an office there. You are not registered in that particular nation. Naturally, you will not be allowed to trade your shares in that particular company. So what is the mechanism out? You enter into an agreement with a regulator saying that I want to list my shares in the form of GDRs, not only in England but in some other countries also. Okay, and they will be traded on global basis. So if this is the case, please permit me to do so, and accordingly the regulator will permit you to trade your shares in some other country under different heads. Okay, so if you are trading on global platforms, it will be called as GDRs. If you are trading only in American Stock Exchange, it will be called as ADRs, that is American Depository. Likewise, any foreign company who wants to trade its shares into India, and they don't have any base in India, they can trade their shares in India through a concept called as IDR, Indian Depository Receipts. Okay. Uh, this is example that I've given you. It's a very rough and a raw example. This is not the definition of what is a GDR mean. Okay. When we come to that concept of GDR in investment management, I will explain to you how GDR actually works, what happens to a GDR, how are GDRs traded, all those things I will explain to you later. Okay. But as of now, just remember GDR is a financial asset, and financial assets are not eligible to claim deduction, are not eligible to claim indexation benefit. That is more than sufficient for you to understand. Is that clear?
Yes, sir.
Okay. Next, please note this is the formula that we are going to use to ascertain the indexed cost of acquisition, okay, and indexed cost of improvement. Please note this. This is, I want you to write down this formula: full fair market value of the asset as on 1st April 2001, okay, divided by cost of inflation index in 2001 into cost of inflation of the index in the year in which it was been transferred. So just note down this formula. I will just give you some time. Please note down this formula.
Sir,
Yes.
So in index cost of acquisition, I guess in the formula, sir, fair market value or cost of acquisition, we have to take, sir, like
Cost of acquisition, whichever is lower,
lower. Yes, sir. Yes, sir.
right? But that was applicable, whichever lower concept was applicable when the base rate was considered as 1981.
1981. Yes, sir. Yes, sir.
But in 2001 there is no concept called as whichever is lower. It has to be fair market value only.
Okay, sir. Okay, sir.
Note down these values. Sorry, note down this formula. Have you noted it?
Yes, sir.
Yes, sir.
Now, hereafter, whenever we calculate capital gain and wherever we have full value of consideration, we are going to make use of these two formulas to ascertain what could be our cost of acquisition and what could be our cost of improvement. So these two things have to be taken into consideration. I repeat once again. I repeat once again. If there is a cost of improvement, if there is a certain cost that you have incurred for improvement towards your house, like painting, flooring, furnishing, waterproofing of ceiling, something or the other, if you have done, and if this is done prior to 2001, I repeat, if any improvement has been done to the house prior to 2001, all those costs will not be considered in the calculation. Only those costs will be considered after 2001. Please try to understand what I'm trying to tell you. If you have acquired the house before 2001, we will adjust the value to inflation levels and arrive at the fair market value of the asset. But if you have made any improvements to your house, and those improvements could be in terms of painting, flooring, addition of certain portion of building, okay, addition of certain portion of layout area, carpet area, uh, change in the graphic, change in the structural design of the house, all these come under the head as cost of improvement. If any of these things is done prior to 2001, all those costs will not be considered in the calculation. Only those costs will be considered in the calculation which have been after 2001. Please try to understand. After 2001, whatever cost of improvement you have done, only those calculations have to be considered. Before 2001, anything that you do for improvement, those costs will not be considered for calculation. Getting it? Any doubts in understanding this? Now, why is it not before 2001? Please don't ask me. I am not the finance minister of the country. Because even I don't know why they have not included prior to 2001. Probably their opinion is, okay, since you have already incurred the benefit of that particular, since you have already spent that particular money for cost of improvement, it is assumed that you have enjoyed that benefit also. That is one of the reasons what I presume that cost of improvement prior to 2001 is not been considered. Clear? All cost of improvement after 2001 has to be considered. Okay. Now this table will be given to you, or these values will be given to you in the exam. You need not remember all these values, but you understand all these things. If you just look at this, how inflation levels have gone up from India. Okay. See, from 2001, we started with 100 as a base rate, and then look at the way inflation has just gone up. Okay. And again, the inflation continues to grow up here. So we are in 1920. So, okay, if you had brought something in 2001 for 100 rupees, if you had purchased something in 2001 for 100 rupees, today that something would have costed you 289 rupees. That is the meaning of it. If you had purchased, okay, something for 100 rupees during that time, today today to purchase the same thing you should spend 289 rupees. So there is a depreciation in the value of rupee. There is a depreciation in the value of rupee. Please try to understand. I'm using the word depreciation. Your purchasing power of rupee has gone down. And this is not applicable only for India, it is applicable everywhere, because anything that is kept for a long time will lose its value over a period of time. That is the whole logic of it. Clear? So these values will be given to you. There is no need for you to remember all these values. Of course, if you want, you can take a photograph of it, because you may require these values for your calculation part. I think I have already sent you the PPT of this particular module. And in this particular PPT, all these values are already included. So when you refer back to this particular PPTs, you will be able to get these values. Clear? So this is as far as the theoretical concept of capital gain is concerned. This is a concept of theoretical concept of capital gain. Okay, the remaining part or the problem part of it, I will take it in the next class. That is tomorrow. I will be taking problems related to capital gain. Now, please remember, the problems that I am going to take on capital gain tomorrow are apart from what has been already given to you in that notes. So whatever problems are there on the notes, that is for your assignment purpose. Please look at it, solve it, because I have given you ready-made problems so that you practice it. Okay, other problems which are on a variety of areas, that I will be solving it in the class tomorrow itself. Clear? So technically speaking, tomorrow by the end of the class, we will be able to complete all our syllabus. Our syllabus as far as capital gain is concerned. In my next taxation class, I will start with income from business and profession, which also includes income from partnership firms. Is that clear? Any doubts in understanding this?
No, sir.
No, sir.
Yeah. So tomorrow, or probably the next Monday also, I may take some problems on income from capital gains, and then we will move ahead with income from business and profession. Is that clear? I want
Yes, sir.
everyone to come in the video mode, please. Take up the attendance. I can't see Rashmi here. I think only Aryan Jakarnavar is absent today. So Aryan Chakkarnavar is absent. Who else? Vishnu is here. Ishwar,
Excuse me,
are you
sir.
there? Yes.
So do we have break now? Because we had 11 to 11:30 break.
I'll just ask, sir, because we are busy with some admissions.
Yes,
That's the
sir.
reason I had to start class late. I'll just ask, which class do you have next?
MB Patil, sir.
I'll just ask him. Do you want a break?
Yes, sir. Yes, sir.
Or you are already on break?
No, sir. So need
You're
a
already
break.
on a break, right? A big break. Anyway, are you keeping yourself updated as to what is happening in terms of starting of colleges? Have you read the newspapers? Have you read newspapers? Are you aware what is happening in terms of admissions? Not only admissions, starting of colleges, how the college will function, what is going to happen, from when
Yes,
the
sir.
college
Yes, sir.
will start.
From 17th of November.
19th of November, I don't think. 17th
From December, right, sir?
December, I don't know.
Sir, it
January.
was from December, right?
I don't know. Honestly speaking, I don't know. There are speculations that 2nd December it might start. There are also speculations that 20th December it might start. So we are seriously unaware of all these things. But a lot of things are really happening now in terms of how to start colleges. I think engineering colleges might start. Engineering